Hello, welcome to Spy Money. The special of the week, SpyBot Trend Indicator for NinjaTrader 8. That is going to be our special today. And let's talk about it, see how you can make some money with it. So, I typically trade from 6 in the morning to about 8 o'clock in the morning. Usually a couple hours a day. And then the rest of the day, I'll trade sometimes, but I usually don't. That's usually when I trade. So I'm going to show you what I would do if I was using this particular indicator. Is whenever I see that it's kind of going sideways, like any other indicator, you just kind of stay out. So on this one, you're looking at something like this right here, that zone. So I would not even be trading this because you're probably going to lose money. And on this particular case, you would have made money right here, but the gold, you don't go in the trade. So I guess I need to tell you what we do. If it's red, you short. If it's gold, you stay out. If it's blue, you go long. Pretty easy. Very visual. You just have to follow it. It does have arrows. You even have alerts in the settings where you can turn on. So whenever it does turn, it'll alert you so you can hop in on the trade. But on this one, I like to look at my chop zones and draw them out. And you can see this. If you're not breaking this high here and it goes up and comes back down, this is chop and you're just not going to trade it. So I would not have been in any of those trades. Well, this one I would have originally. But when it went up, you get out of it. And just to give you an idea, you would have been in right here. And the very most you could have made, which no one can hit that top, is 345. So more than likely you would have come down and probably stopped out along through here at $200 a contract. Very good money. I usually trade 8 to 10 contracts, so at 10 contracts, that's $2,000 on just that one trade. On this one, you would have got in here, and if you're perfect, which we're not, it's 260, but more than likely you probably would have got out right there. That's where I would. So that's $125. And then you come over to this one, you're going to get in again, and let's say you get in there, and I would have been out right there at the least. So I chase my candles as I go up. I don't like to wait on the pullbacks and all that. I can always get back in if I want, but I usually chase it. And realistically, I probably would have been out right there, realistically. And just like on this one here, when it pulled back and started dropping down, this one here, more than likely, probably would have been stopped out on that candle right there, which is $75. So, but you can hold it until, the color changes or whichever way you want. It's your strategy is what you're going to do. And then we come down to the gold. We're not going to take that trade because that's consolidation. And then we get in again right here, and it goes right on up. And I probably would have been out, actually probably right there. That's where I would have been out. I might have been out right there. So somewhere between 215 is what I would have made per contract. So all winners so far, no losers. This right here was all zones, so we wouldn't have traded it. And then we come down through here. We are in this bullish channel. It's a good idea that when you're in a bullish channel to probably not take the shorts. Now this one would have closed there, opened there, and usually get some sort of a pullback or something on them. But on this one, I would not have done it anyway because you are in an upward trend. You can see right there. So with it being in an upward trend, that's what I would do, is just take the longs from here. But let's just say you did get in that, and you would have been in short here, and with this right here, you probably would have been stopped out at the most right there. So there's $125. So if you did get in, which I personally would not have got in that trade, but if you did, you would have lost $125. Then we come over here and we look at the, I don't know how that got on there, but you look at the long here that you could have got in. So if you would have got in right there and you come up, and more than likely I probably would have got stopped out right there. So I would have took my profit off of this pullback, but you could have made more. So there's another almost $200. It's $195. Again, we are in this uptrend, so I would not be taking this short, although you possibly could have made a little bit there. I mean, from there to there, which you wouldn't have got, is $30. But let's just say you got in and you put your stop above this candle here. so you lost $75. So again, you're not going to win every trade, but for the most part, this indicator does really well. And we go back to where we're in this uptrend, so you just take the longs. So when this goes to pull back, you want to get in on the longs. This one you would have lost money. This is a definite one you would have lost on. You probably would have been about right there, which would be that one. So it's about $100 loss. Then you come back over here, you're going to be entering, and when this goes up, I probably would have got stopped out right there. So there's 115. And when it comes down and starts shooting up, if you can always decide to get in. I am a one signal per trade guy usually. I usually don't hop back in on the second. Sometimes I do, depends. Depends on what indicator I'm actually running on. This one, you are at 9 o'clock. I do not trade after 9 o'clock, so I would not be in this trade. But if you took that one, and you would enter right there, and your stop would be here. So you do have some losing trades in it. But let's just say that you traded all of these and you were done. So from 6 in the morning, roughly, this one here is at 5:24 to the last trade would be 9:08. So if you did that, let me get a calculator up here and let's just figure this out. You would be at $200, and then you would have made 75, and then you'd made 135 and 215, and then you would have lost 125. Then you had made 195, and you would have lost 75, and you would have lost 100, and then you'd made 115, and you'd made 90. So, or actually, you had lost 9. So, let's see. Then we'll do minus 180 to come up with that. So, it's $545 with one contract you could have made just from about 6 in the morning till 9. Now, if you go ahead and take this a little bit longer, then you could have made possibly more. So, let's go ahead and move this to the open. A lot of people only trade the open and thereafter, but right here is a good trade that you could have got. This one, I would have been, come down, I would have been stopped out right there, so there's 250. And this one right here, and when it went up, I would have been stopped out probably right there, so there's 215. And this one I would have not taken because we are in that bullish move. I would have taken this one, and I would have got stopped out right there, so I would have lost $85. And this one, I would have got my short, went on down. I probably would have got stopped out right there because that's pulling back. So I like to secure profit. Nothing wrong with that. And then we go into open. We're not going to trade this because this is just a flat zone. Every bit of this right here is a zone, so you're not going to trade it. You're going to wait till it comes out. When it comes out, you're in a blue right here, so you go ahead and hop in. And let's just say you take it all the way up and you get out right there. It's 435 just on that one trade. This right here, again, we're in chop. So as long as we're in this chop, we're not going to take the trades. We're just going to stay out of it. And then when it come out, maybe we got in right there. So let's just say we got in right here. And we took that up, and I think I would have my stop right there. And then when that popped up, I would have brought my stop up to here, then to there. So I would have been at 245. This is in a bullish movement, so I would not be taking that short. I would be waiting, and then I would get in this long, and then I would say more than likely I probably would have been stopped out there at 160. Now, on a higher time frame, this would be one big long that you would take. Now, this one, you would be in here. My stop, I would put it right below that. That's where I would be playing. And I would just let this go, so this probably would have went right on up. When this actually went back up to here, I probably would be running my stop close. So there's $95. And then this one right here, no red, we turn blue right there. And then when this went up, I would be taking my stop with it. So right there's 120, but now if you wanted, you can keep your stop right down here, say break even plus 1 or so. And if you did, you keep on going, you just keep moving your stop. And when this thing starts going sideways, maybe you go up and it comes back down, maybe you go into right there. So that would be 540. Because now you've got another zone up here that is playing out, another chop zone. So when you're playing in that chop zone, you don't get in it. Now on this one, that would have probably been a losing trade because I would have entered that trade, I'm sure. And of course, I don't trade this time of day, but I would have lost. So, you know, you're probably looking about losing $90 there. This one here, we're back into that chop zone again, so I would not be trading anything in this area. And then we hit a short again, so I would be trying for that short because we made that lower high. So if we get in here and it comes down, I would probably get stopped out. I'd say probably right there is 230. And then we hit another short there. Now, I just picked last Friday. I didn't go to any certain place to find out what works. This one, I would have got stopped out there. It's 280. And these right here are chop zones. I would not be trading in a chop. I just don't trade there. Once we come out of it, then yes, I would have got in that short. And you come down, probably right there. And again, I would not have traded this one, even though it would be good. But I would not have traded any of this right here. But you could have got in and just got a few points at a time. But I would not have entered any of that. Then we have the short coming down. Yes, I definitely would have been in that because we broke out of this chop zone. And then when this come on down and we start seeing this come back up and stuff, my stop would have been right there, no higher than that one. It was $550. So that's just by 10:30 in the morning. I mean, we could keep on going, but I'm going to stop right there. And if we do that, let's go back and add that if we traded all of that together. So we stopped at the 90, so we're going to go and add the 250. So let's bring this over. So we had another $250. And then we add 215, and then we lose 85, then we gain 195, we gain 435, we gain 245, and then 160. So let me do this right here, drag this on over. So we're at 160, and then we're going to add the 95. Then we're going to add 540, whoops, and 90, 230, 280, 175, and 555. One day, trading the SpyBot trend indicator, you would have made $3,925 if you had played it the way that I trade. Now, what I showed you was real simple. If you're in this chop, you just keep on drawing this out and just don't trade in it. Same with up here. When you see that, it goes up and it comes down. You don't really have it. You're going to lose there. When it comes back up, you just go ahead and draw this chop zone. And then the next short we have coming out of it, that's the one you hop in. So all of these trades were pretty simple. There was, what, 1, 2, 3, 4... So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 2, 3, 24. 24 trades by 10:30. Now, you could have traded this the rest of the day and made more money. But just by 10:30, you had 24 trades. So let's put that in there. 24 trades. And then out of those 24, we only had a few losses. Let's see here. There's one. And 2. There's 2 losses and 3, 4. 4 losses is what we had. Oops. We had 4 losses there. Go back here. What was that? There we go. So we had 4 losses out of all that. And we'll take this one up, and then we're going to go and put in 4 losses. And that means we had 20 winners. Oops. We had 20 wins, and we had a total of, let's see here, what was the amount? It was $39.25 in profit. So we had $3,925 total profit, less your commission, of course. So you would have 24. Let's do that. 24 times 3.98 for lifetime license is $95 in commission. So you would have $95.52 commission per contract. So that's where you would be. So roughly $3,825 or so. So if you look at that minus the $39.25, so that's going to bring you to $38.29.48 net profit. Pretty good money. And that's from 6 in the morning till 10:30. So, you're roughly 4.5 hours just on that. And as you can see, that's a winner. This is a winner. That would be a small loser, winner, small loser, winner. This one right here is in chop. You would not even be taking that one. Here is a winner. That would be a loser unless you had your stop down here, which is where I would have it. And then if you did, it would be a winner. Otherwise, it'd be a loser with another winner there. You wouldn't be taking this because you're in the uptrend. This one right here, you got chopped, but you may have made or lost here. You might have held on. If you put your stop there, which I would have, then that would have allowed you to have another winner. And it just keeps on going. And that's trading a 144 tick. You can trade this on a smaller time or a larger time frame if you like. I like the tick charts. You seem to be able to scout more. But you can see that you're going to make money here. You can run it on a 15-minute chart if you want. The 15-minute, I'm not that thrilled about it, and the reason I'm not is I don't like to get in trades that long. But as you can see, if you got in this one, you would be working on another project there. Sorry about that. If you got in there and then just say you got out on the collar change, there is $1,870 if you traded on the 15-minute. So lots of money in here, a lot of money. And the more you make with it, the happier you are, I think. So let me know if this is something to work for you. And if you need more training on it or whichever, it's pretty simple. It's a very simple trading strategy. Only thing you have to do is long blue, short red. Watch your chop zones. If you're going sideways, just don't even trade it because they're going to take your money. Unless you go in for 2 or 3 points at a time, which means you can make $60 or $80 a contract. So, there's money to be made there. But you've got to be pretty skilled at getting in the chop and getting out real quick. So, let me know if that works for you. There is a discount code on the website. If you go to the website, it's on the home page. You will see this. You get 20% off. This is through November the 26th. November 26th, and this sale will go off. So they'll go off then, and then we'll have a new one up then. Have a great day. Appreciate you guys, and look for the coupon code.